Now let's go next over to the Aussie dollar US dollar. On the daily charts we were looking at this big pattern here, and we will look at it in a minute, but following that very strong bullish activity above both the Kijun-sen and the Tenkan-sen, we have seen formation of a very small bodied candle here for this month's trading. No technical change of trend, and it does suggest that there is potential for a change of trend, which would be quite normal. Now, we have had sustained activity above our Kijun-sen, and we know our Kijun-sen is our benchmark for primary bull or bear. We did have strong breakout, strong bullish follow through, so it does suggest that we are in a strong primary bull now in the longer term time frame with the Aussie dollar US dollar. Any retracement here, we will be looking for support initially around these highs at 77.50 and then down to the Tenkan-sen at 76 roughly. This is something of an almost a hanging man type pattern. Also something of a potential bearish harami and tweezers top. So confluence of a few types of patterns. None of them are copybook, but certainly the sentiment here is about the that previous strong upside momentum in terms of the white body and the extension of that white body, and the market having a bit of a breather with a potential retracement off the back of the loss of that net momentum with a small black body candle forming. Now, as always, with these potential bearish reversal patterns, we do require confirmation, and that would be a candle with a lower high and a lower low. Just looking at the resistance here, that previous major swing low holding as resistance previously and for this month's trading and the previous month. So that is a crucial area that the market will need to trade through, very close to that 80-cent level. Up above there, the 81.55 level, but certainly if we do see strong bullish activity up above there, we could see the market extending further to the upside. And just bearing in mind that as we get past the next month into the next couple, that Ichimoku cloud does move lower, and it will strengthen the resistance around this 80 to 81.5 level if the market can't break out over the next month. And just looking at the various patterns here, and previously on the daily charts in the previous analysis, we were looking at this large area, and it has manifested itself as something of a symmetrical triangle. We have closed above there, confirming the triangle pattern. We do have a target up around the 87.44 region. We are seeing potential for a retracement, and we will be looking for support to come in at the upper barrier on area retracement around the 76.86 level. But certainly this has completed, and in the FX space, the patterns do tend to work out fairly well. They are fairly reliable. And just looking at our pitchfork technique here with the major pitchfork with Aussie dollar, US dollar on the monthly charts. Here we saw previously very strong support and resistance coming in around that internal line. We traded through there in a bullish manner. There is an opportunity here for the market to trade up to the median line, which for the next month will be around 82.34, very close to the cloud for the next month's trading. So we'll strengthen the resistance around this region about the 82, just above the 82 level for the next month. And on the minor pitchfork line, resistance coming in very close to that upper warning line. If we do see any retracement, as we saw for this month, support coming in at the or on any test to lower level support coming in at that upper pitchfork line, and we'll expect to see that for the next month, 78.81. Perhaps if we do see any change of trend, looking for support around the intermediate line, that internal line about the 77.66 level. If we do trade higher, looking for resistance at the upper pitchfork line around the 81 cent level.